Hey, what's going on everybody? Leo Invest here, back again with another YouTube video. This video I'm going to be recapping two trades that I took on Friday, July 11th. Reason why I want to make this YouTube video as well is I feel like this is an important recap for all of you trying to learn the fractal model, as well as just gauge more of an idea for how you can better set A+ entries when trading in live market scenarios. So, getting right to it here, what do we notice about this current market with NASDAQ from Friday that had me interested in a potential NASDAQ long? Well, there's a couple different things we can look at to begin with. First of all, we formed this original high from the 7 o'clock high here, which we'll mark out in this black line. And then what was I watching for here? Well, when we look at NASDAQ here on the 3-minute time frame, there's a couple different things to note. First of all, NASDAQ had this relatively aggressive bearish leg that had occurred prior to having an accumulation that had formed during the 7 o'clock up until 8 o'clock window. What did we see then happen with NASDAQ at this 9:30 open? Well, 9:30 ended up sweeping that 7 o'clock high before having another bearish move lower. And so just to map out a couple key levels here before we go into the actual trade that I took, let's just mark those out. So here we have this 7 o'clock high here marked in this X, and then we have the low of the 8 o'clock hourly candle here, which I will also mark as our 8 a.m. low. So 8 a.m. low here for the hourly low. So when I look at this, what am I exactly looking for in order to frame an A+ entry in this trade? Well, as we see, NASDAQ had created this range from the 7 o'clock up until 8 o'clock prior to that 9:30 New York open before we manipulated the highs of this 754 candle body high, creating that 7 o'clock hourly high here. And so what I was watching for was to see one thing happen. Either was to see a sweep of this 8 a.m. low or to see a sweep of the London session low prior to seeing some bullish leg higher. And so what did we see happen at this 9:30? Well, 9:30 opened, we swept the high, then had a 2 bearish body down closure, which then eventually, which we'll see here, swept out the 8 a.m. low. And what do we notice about this 3-minute candlestick on this from the sweep of the 8 a.m. low? Well, this 3-minute candlestick swept the low and had a very aggressive bullish wick with a bullish body closure, which tells me as a trader that we did have high interest liquidity down at this 827 low, where institutions and market makers were trying to fill out these orders at this 8 a.m. low. So now, what exactly do I want to look for? Well, because of this candlestick, I can't really trade anything off of this. It is just a rejection off of this 8 a.m. low. And so I'm trying to frame an entry signature off of a potential reversal signature. Either two things can happen. We get an aggressive closure back below this 8 a.m. low and send ourselves to these London lows marked below, or we see some type of change in state of delivery form for a potential long entry into NASDAQ back at this 9:30 open here, which I will also mark out on the chart. So let's just get this as our 9:30 open, because that was where market ended up opening and sweeping out this high. So we do have this swing high here. And then let's just play out to see what happens. So we sweep out this 8 a.m. low, then we get a closure back below this 8 a.m. low. Yet again, no trade would be taken since we still are not clear as to what direction NASDAQ wants to go in. So let's continue to play out and see what happens here. And as we see, what happens on this next bullish candle body? Well, this bullish candlestick actually formed a closure above a bullish 3-minute change in state of delivery. Why is that? Well, we swept out first the 9 to 9:30 candle body lows, which is a sweep of a higher time frame candle with the fractal 3-minute and 30-minute alignment. The 3-minute swept out the 30-minute previous candle low. And then what do we see here? Well, we also swept out the hourly 8 o'clock low during this 9 a.m. hourly candle. And so here, when we sweep that, this sweep with this undisrupted one bearish candle body becomes our change in state of delivery. And so a closure above now, after manipulating those lows, becomes an entry signature into longs. And so here was where I actually ended up taking my long entry because of this aggressive bullish movement off of this closure of this change in state of delivery and this movement from this 8 a.m. low sweep that occurred with a very aggressive bullish close. And so this now becomes my signaled long entry by utilizing this change in state of delivery. So now let's look at a long position. Well, I entered on the closure of that candlestick. Where does my stop lie for this trade? Well, my stop lies at the low of that candlestick. Oops, apologies about that. My lies at the low of this change in state of delivery. For this example, I put the candle body. You can use the candle wick or the candle body. Typically, the change in state of delivery utilizes the candle wick. So I had the candle body here. And then where do I target next? Well, this is where you want to find these swing points or potential draws on liquidity in order to validate a trade where you can see market makers trying to push market to. And so an example here, well, this 930 formed a very aggressive high, aka that 930 open high, right, at that I have marked in my chart here. And so with this long entry, I was actually targeting this 930 open for this long position, because here we see we had an aggressive closure, an aggressive rejection off that 930 open, and then a 2 candle body down closure that then manipulated this 8 a.m. low. So this now became a valid long entry for me, where I was targeting this 930 open as my trade. And as we see here with all of my trades, I always like to shoot for a 2R on these positions because we want to remain consistent in terms of risk management to some extent. And now we'll just let this play out and see what happens for this long setup. We see here, we get a very aggressive closure back above, approaching this 930 high, until finally we were taken out of this trade where we swept out that 930 high. Now let's see what happens when market, once we retest this 930 open, what do we see happen with market? Well, we end up rejecting off that 930 open, since once again, that becomes a draw on liquidity. And so this trade actually did take me out for a beautiful 2.77R, and in my eyes was a very solid A+ trade setup, since we had an external sweep, a sweep of the 8 o'clock hourly low, as well as when we use aligning timeframes, and this example being the 3-minute and 30-minute alignment, we did get a sweep of the 9 to 9:30 previous 30-minute candlestick during the 9:30 to 10 o'clock 30-minute, which formed this change in state of delivery where we entered our longs, finding our draw on liquidity up to that 9:30 open high. So this was one of the trades that I ended up taking that yielded a very, very high value setup here. And now let's go through my second trade setup, which I'll just play out market a little bit here, and we'll go into that in just a second. So what do we now notice about market as we continue on during the day? So I'm just going to let this play out a little bit, just because the second trade setup here was a short that I had taken. Unlike my long I took at that 9:30 open, I ended up taking a short around 2 o'clock here, around 3 o'clock on the same day, Friday, 3 o'clock. So let's look at what we see happen here now with NASDAQ. Well, once again, similar to all my trade setups, what do I typically like to look for prior to entering trades on candle 2 confirmation? Well, when I'm using candle 2 sweeps, I like to see sweeps of external candles or higher time frame candles in order to yield a higher probability setup. As you've heard me mention in many of my other videos, when I do trade internal sweeps typically yield lower probability versus external sweeps, which yield a higher probability, because external sweeps are where market makers typically have orders lying and are waiting for you to take your entry and potentially stop out retail traders. And so now let's go through this trade that I took on these NASDAQ shorts at around 3 o'clock. So what do we see here? Well, I already have this marked out, but this line here with this X is the high of our 2 to 2:30 p.m. candle. As we mentioned, I'm once again on the 3-minute time frame. I always like to look for aligning time frames. So this is the 3-minute and the 30, where this 2 to 2:30 p.m. candlestick created this high. Now we have the formation of the 2:30 to the 3 o'clock candlestick, and so there are two things that I'm watching. Either I want to see a sweep of this external high from this 1:06 p.m. candle body high, or I'm looking for a continued move lower, because as you see here, we are still very much so in a bearish trend, since we are following proper market structure. We are creating lower highs and lower lows with NASDAQ. And so when we're looking for this, what exactly can we see this happen? Well, we can see kind of market create that lower low, the lower high, the lower low, and we can see this market structure continue. But then there's the opposite situation that we can see occur, where we actually break out of a market structure and see a confirmed move higher, where we break out of a high and then start to create newer highs and higher lows. But in this example here, this is where you can look for sweeps to potentially find these signatures or these continuation signatures during the candle 2 movement. And so here, when we look at my chart, what did I notice? Well, I mapped out that 2 to 2:30 p.m. candle body high, until finally, what did I see happen here? Well, we swept out this high and got a relatively aggressive bearish closure back below with a bearish wick. And as I mentioned too, wicks are typically what tell the story of a candle move and a market move. And so here, when I see that we swept out the high of the 2 to 2:30 p.m. candle body high, I'm now looking for a potential continuation signature lower back into these draws on liquidity. And so here, once again, as my first trade, we have a draw on liquidity that was down here, which I will mark in the X, but also we had a very, very handy 3-minute fair value gap that had formed off of this swing here. So now going to mark this out as well with this 3-minute fair value, since we had retested it before this long position, but I think these are always great areas where you can look for potential entries. So this as well, we will mark, or potential take profits. So here we'll mark this out as our fair value gap. And so now let's look at this trade. So here we see the sweep of this high. And so what does this 2 candle body bullish closure become? This now becomes our bearish change in state of delivery. So now if I want to see a confirmation below, if I see a candle body closure below this change in state of delivery, this now can be a signal into a short position into potential shorts on NASDAQ in this trade, targeting these 2 draw on liquidity, both this swing point low at 142 or this fair value gap on the 3-minute. But then again, what was another thing that we noticed about this trade setup that gave me high probability for a potential short setup? Well, we had a bearish block that had formed on this 3-minute candlestick, which I will now mark out as well on my chart here. Here we have a formation of a 3-minute, which I will mark here with this 3-minute breaker block. And so this now becomes the candle 2 unicorn trade setup. So if I want to be tagged into a short position, I want to see a closure, candle body closure, both below this change in state of delivery, as well as this bearish breaker block. And so we'll let market play out here and see if we do get that confirmation lower. Here we see we retested the high of that 2 to 2:30 30-minute candle and still did not get a closure above, meaning that this was still very much so a valid change in state of delivery. Here we go. That was a micro closure below that change in state of delivery. And then finally, we got a closure below the 3-minute breaker block, as well as that change in state of delivery, validating this short setup as now a candle 2 unicorn short, where we can target these 2 draws on liquidity. So as I mentioned, this becomes where I enter. And when I'm looking for this short position, I enter on the closure, put my stop about 2 points above a breaker block, about 1 to 2. So we'll just mark it out around here. And then I can target multiple things. But as you guys know, I always like to target 2R on these trades. And so this fair value gap became my draw on liquidity, where that became a 2.6R trade. But this swing point low ended up being an area where I was going to set my stops to break even if we saw a candle body closure below. So with the setup here, we will now set my TP at that fair value gap and then my stop loss at the breaker high. So now we have a defined short setup with the candle to unicorn validating the sweep of that 2 p.m. candle, that 2 p.m. 30-minute candle with the 2:30 to 3 p.m. candle sweep. So now we'll let this trade play out and see what happens here. We get a confirmed closure. We don't even tap back into the breaker, and we ended up getting a very aggressive move on that 3-minute candle all the way until we tagged our draw on liquidity, being that 3-minute fair value gap. And this here, once again, yielded yet again another beautiful A+ trade, this one being the candle to unicorn in comparison to the change in state of delivery from the Fractal. And so this was a beautiful Friday for myself. Actually yielded one of the largest futures trading days for myself personally, and just all around a very solid price action where these higher time frame sweeps really played out well with these change in state of deliveries, as well as these breaker block confirmations for these candle to unicorns. But reason why I felt this was an important video was just to give you guys more of an understanding for why sticking with the same entry model is very important when you're trying to become a consistent trader, but also to show you that finding these draws on liquidity, these swing points, and these key levels can be really good areas where you can find potential TPs. If you're entering a trade without a game plan on when you want to exit a trade, and that can be based on RR, on profit, or even just key levels, if you do not have a set defined plan for when you want to enter trades, that is typically when you will get hurt the most on your account and lose the consistency and profitability that you see within a lot of successful traders. And so these two trade examples clearly mapped out prior to my trade entry where I could see market going, where I could see liquidity being swept, where I could see market makers pulling live indexes or live markets too. And so the first example you guys had seen with those key levels, and then with this NASDAQ CTU example being this 3-minute fair value gap, and then going break even with a closure below this swing point that had formed at this 142 candle. So anyways, that concludes my 2 trade recaps from Friday, July 11th. I hope you all enjoyed the video, and I will catch you all in the very, very next one. Thank you all so much for watching, and I'll catch you all on the live stream tomorrow morning. Bye now.